You sat at that table, you helped make these decisions for many years. Would you be having any second thoughts about this steadfast decision the Fed has made? Inflation has to be high and accelerating. That's one of the two key things that has to happen before we start reducing stimulus. Do you see any risks there?
There is. I'm not sure about your and accelerating that you added. It has to be above 2%. He's been very clear about that. They have some catch up to do from the below 2% years, though the Fed's been extremely cagey about how much catch up there is. So I think that's entirely appropriate. And my opinion is that until it gets into the upper twos, if that ever happens, the Fed is not going to get itchy fingers. If it starts going, just to take a hypothetical, if it starts going in the upper twos and looks like it's rising, then I think the Fed will get itchy fingers and we'll see changes in the policy.
So do you have any sympathy with Larry Summers' view, former Treasury Secretary, Harvard University economist, someone you know well, his view that there's a fairly substantial risk that this waiting to see this actually happening risks the Fed having to play catch up and raise rates even faster than they would have otherwise, risking the recovery they've fought so hard to help create?
So first, you used the word any, so I guess I have to answer yes, but not much. I'll elaborate that in a second. On the catch-up, the way the Fed has refashioned its strategy, which is not to look preemptively at where they think inflation is going according to some forecasts, but actually to wait until they see the whites of inflation's eyes. That implies that the Federal Reserve is going to have to play catch-up. So they fully expect inflation will go past 2% eventually. They will play catch-up, but they believe they can play catch-up. The other thing I wanted to add is my friend Larry Summers has sometimes raised the specter of, he's used phrases like the highest inflation rate in a generation. That would be like 6%. I'm not the slightest bit worried about that. If you say someone will be petrified if inflation should top 3% for a month, that could happen. It's not my personal central forecast, but I certainly wouldn't rule it out.
Okay, you've been at the Fed, you're an economist, you're a student of the Fed's history. Do you have any concern that as the Federal Reserve inevitably gets to the point where they at least have to start tapering bond purchases and maybe yields rise a bit, that they're going to get some political pushback? Oh, now wait a minute. You said you have to have full employment, inflation above 2%, because the government's selling a lot of treasuries now. I wouldn't be surprised if there are people in Congress who think it's the Fed's duty to keep buying bonds indefinitely and keep those yields low. Is that a risk for the Fed?
Yes, but I would rank that behind the bond market vigilantes. I think the first pushback you're going to get is from the bond market, and they tend to overreact to everything. And they'll overreact to the slightest hint that either inflation's going too high or that the Fed is starting to taper earlier than it had previously said. There could be some pushback from the Congress. I think the Fed's in a fortunate position that Joe Biden is sitting in the White House and not Donald Trump. If it was still Donald Trump, there'd be a lot of pushback. There'd be screaming, tweeting, everything. I'd be shocked if Joe Biden does anything remotely like that. He respects the independence of the central bank.
Alan, do you think the Fed chair is worried about the amount of froth? I mean, he acknowledged that part of it has to do with the supportive monetary policy settings, but he also said it's also to do with the fact that people are at home. It's because of the pandemic. It's because of fiscal settings as well, right? Is that something that the Fed continues to keep into account, given that we've had episode after episode across different asset classes of this level of froth and exuberance?
There's no doubt that he feels on the spot. He's going to feel more on the spot in a few months from now as the thought of tapering, for example, starts to move from the back of his mind, where he has shoved it, to the front of his mind. And not just him, but the entire FOMC. It's hard to know how they're looking at these various evidences of froth here and there. If they're isolated and small and, little crazy stuff like GameStop a month or so ago, and what is it, Doggy Coin or something? They're not going to worry about that. If they see something major in the stock market, in the bond market, that suggests a loss of confidence, for example, that people are thinking the Fed's losing control and is not going to be able to make good on its pledges, that would be a concern. They will all pay rapt attention to that.
What do you hope to see in the American Families Plan? What do you hope to hear from President Biden today? If this plan manages to get consumption back to pre-pandemic levels, would that to you signify an economic policy success for this administration?
I think what's already been passed is going to get consumption back to pre-pandemic levels. If you look at the disaggregated numbers, the portions of consumption, which is a lot, that are not subject to the pandemic fear, so not personally delivered services, not barber shops and restaurants and bars and things like that, but stuff that comes in a box, that is back to pre-pandemic levels, and fiscal policy has had a lot to do with that. Car sales are way up. Home sales are way up, and that has a lot to do with the Fed's very low interest rate policy. It's the rest of the stuff, the things that still make people afraid, like getting on airplanes and going to baseball games and things like that, that it's going to take a little while yet, but it's coming. So to answer your question, I think we're getting there without the new plan that's going to be announced tonight. You want to think of the new plan that's going to be announced tonight, the family plan, I guess, as attending to longer run issues that may not have much at all to do with the pandemic, or maybe a little bit. My personal favorite is family and medical leave. We're just outliers in the rich world in not providing things like that. The pandemic made that gap more obvious than it was before, but it was pretty obvious before. And if we can make strides against that policy, it's not just about getting back to pre-pandemic levels. It's about changing the structure of the workforce, especially for women in the U.S.